Range trading in the US and uncertainties over the impact of AI keep stocks in check. Metals and PSU banks eke out gains while IT and realty drag. Dr. Reddy's MD GV Prasad tells CNBC TV 18 most regulatory issues for its weight loss drug in Canada are resolved and a launch is likely in May. He adds that consumer healthcare is an area of focus for acquisitions. Mid-caps outperform with select stocks seeing sharp moves. E2E Networks jumps after Nvidia announces a tie for AI factories, while Aurobindo Pharma slides on serious UFDA observations after inspecting one of its units. IT staffing firms TeamD's and Quest Corp say entry-level hiring has shrunk, but hiring spends remain robust as firms are willing to pay top dollar for experienced AI, ML and cybersecurity professionals. They add that reskilling is the only way to bridge the big demand-supply gap in new technologies. Hello and welcome to Business Lunch, live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra, and at this point in time, markets are absolutely flat when it comes to the benchmarks. Mid-caps have picked up, though. It is outperforming the benchmark with a gain of around 0.2%. We are seeing that recovery come by on the back of Bank Nifty moves, and that index is up around 0.3%. Metals continue to shine in trade today as well. So Tata Steel, that's your top Nifty gainer today, followed by HDFC Life, which has also picked up some pace. ITC is the other one on the back of some price hikes. We have Axis Bank, which is doing very well. Tata Consumer is the other stock which is doing well. However, we do have oil producers like ONGC, which are lower in trade. We also have Eternal, which is seeing some cuts, 2.5% gone there. And IT continues to be on our radar because Tech Mahindra, Wipro, Infosys, HCLTech, some of them are the top losers in trade today. In fact, talking about IT, it has to be all about the AI Impact Summit. It is day 3 of that summit in New Delhi. Let's go across to my colleague Rachna for a mood check at the venue. Rachna, tell us more.
Well, it is day 3 of the India AI Impact Summit here in New Delhi, and it is turning into a story a bit of both big breakthroughs and big reality checks. But at the center of the buzz here has been the idea of responsible AI. We saw India make a successful attempt at a Guinness Book World Record of having most number of pledges for the usage of responsible AI in the 24-hour period. We just saw the IT minister unveil that and felicitate. Apart from that, speaking of the big reality checks, we saw what happened to the Galgotias University when they tried passing on a Chinese robot as their own innovation. The booth has now, they've been asked to vacate the booth from here, from the summit, and additionally the expo has been extended by one more day. So we're right now at a perfect 50% mark of what is now a 6-day event for the expo. Originally it was supposed to be till the 20th, but now the expo has been extended by one more day, that is till 21st, and that's because there will be some commitments here at the 19th, because of which expo will be shut. But coming back to the big headlines that we're picking up from the summit, the first and the foremost is Nvidia. Nvidia has doubled down on its India commitment. It has now announced partnerships with Yotta, L&T and E2E Networks to expand sovereign compute capacity. Apart from that, they're also partnering with venture capital funds because Nvidia now believes that VC funds trying to tap into startups who are excelling at AI will be the way forward when it comes to taking India's AI story to another level. So they've partnered with Peak 15, Elevation, Accel India and many more. But with 2 more days to go with the summit at the Bharat Mandapam and 3 more days for the expo, now all eyes are on what further policy signals and big ticket collaborations we're seeing. We already saw multiple partnerships roll out here, but it is still a long way to go and many more things to pick up from here.
Okay, interesting updates there. Thank you so much, Rachna, for joining in. So extended by a day. That's the update coming in from the AI Summit. We also spoke to IT Minister Ashwini Vaishnav and TCS MD and CEO K. Krithivasan on the potential and likely impact of AI on the industry. Listen to what they had to say.
Over the coming 2 years, we can expect about $200 billion investment in the AI infra layer. And simultaneously, we can expect more than $17 billion in VC funding for the startups and deep tech, especially deep tech startups, in solutions, in applications, in the way AI would be used.
There's so much happening and there's no need to panic. You have to think, sit back, relax, and think properly. There's so much of more work to be done. Every time there's a disruption, the work expands. And the good companies will participate, take a forward-leaning approach, invest in that, and they should be able to increase the pie. It's again based on a larger scheme. We believe that you will be able to participate more in the AI ecosystem if you operate across multiple layers. We are looking at participating right from the infrastructure layer. There's an infrastructure layer, there's a model layer, there's an application layer, then there's the intelligence layer. We want to increase our participation in each one of those layers. That's why you see we participating with TPG, then signing up with AMD. We also signed up with some of the design companies. So that's the overall plan.
Okay, well, AI disruption has been the buzzword over the past few weeks, with Indian IT stocks taking a hit over growth concerns. Companies have also announced a host of tie-ups to develop the AI opportunity. But how much does AI contribute to the Indian IT sector right now, and why are brokerages still bullish on the sector? Reema has all the details.
Thank you very much for that. Indeed, generative AI, advanced AI may be the buzzword right now, but the actual revenue contribution from these technologies is still in very early stages. Now, yesterday, Infosys at the AI Investor Day said the generative AI contribution stands at 5.5% for the company, which is pretty much in line with TCS at 6% and HCLTech at nearly 4%. But remember, the definition of AI revenue may vary across companies, which makes direct comparisons tricky. But the question is, how will you read this number, AI contribution at 5%? Would you be disappointed because AI has been around for some time, but still the revenue contribution is 5%? Or will you look at it as a half glass full and say, well, it's only 5%, which means look at the significant headroom for expansion from here on. Now, brokerages are still bullish on Infosys. In fact, overnight, a lot of calls came through. We analyzed them. There are 52 analysts, out of which 38 have a bullish call, 12 of them hold, and 2 of them have a sell call. Global brokerages like JP Morgan, Jefferies, UBS, HSBC, CLSA have all reiterated their positive call. For JP Morgan, the target price stands at 2,050. For CLSA, it's 1,779. And the bullish stance by these brokerages rests on 5 key drivers. 1, the AI-first services opportunities. That is expected to expand sharply. Yesterday, Infosys said it's a $300 to $400 billion opportunity by 2030. Secondly, data modernization is emerging as a key growth driver. Enterprises need partners like Infosys and others to clean, organize, and modernize their legacy data before you can actually deploy AI at scale. Third, even Infosys' collaboration with Anthropic, the strategic partnership, does show that the company is taking steps to remain relevant in the AI ecosystem. Fourth, just talking about the near term, here and now, FY27 macros are looking better, which means FY27 in all likelihood is going to be better than FY26 for all the IT companies. And finally, fifth one, the valuation comfort. For Infosys in particular, it's trading at 18-19 times forward multiple, which is cheaper than the long-term average multiple of about 20 times. So the message from the brokerages is clear. They're bullish, but it is disconnected with what's happening in the market. The Nifty IT index continues to see pain. It's down 15% in the month of February alone. And it's now very close to its 52-week low, less than 5% away. And this is not a domestic story. If you look at the global ETF for software, that is down 22% on a year-to-date basis. But that's about the numbers and the markets. The other worrying thing is on jobs. Now, yesterday, Nandan Nilekani said that on account of AI, 92 million jobs will be lost, but 170 million jobs will be created. But if I just look at the Indian IT companies, in the first 9 months, more jobs have been lost than created. The headcount for the top 4 IT companies is down by 700 plus in the first 9 months. It's on account of TCS and the restructuring that they did. But the question for the economy remains that if on account of AI, we do see a decoupling of revenue and jobs, then what happens to job creation? Back to you.
Okay, all right. Thank you so much for joining us with all those details, Reema. Earlier today, we spoke to market expert Sunil Kaul of Goldman Sachs and Kenneth Andrade of Old Bridge Asset Management to understand their views on the IT sector. Listen into what they had to say.
If you look at what has happened in the market in the last few weeks, I think there has been a relentless selling and indiscriminate selling of the software companies because global investors are basically questioning the terminal value of these companies. And as we know, software adoption at the enterprise level is pretty complex, right? There are winners and losers and different cohorts, and somebody has to provide the cleaner data sets for these AI models to work. Somebody has to drive the enterprise adoption. In the US market, the real issue is not just the terminal value, but the margins for these companies are also at record highs. And so in the next few quarters, until we figure out who is kind of winning, how the business moats are, what the pricing power for these different sectors are, probably there are still going to be uncertainties around this. And so we are not advising clients to buy into the global software companies yet.
This is not status quo. This technology change or this automation is not status quo for a lot of businesses. And I think that's what the markets actually are reacting to. So from a standpoint of just IT services, I mean, it's not very clear how companies will adapt and how fast they will be able to adapt, but there will be a lot of uncertainty on how these businesses will meet any kind of growth trajectory, at least in the near term. One thing I must say is completely in favor for these companies is that historically they are quite comfortable in terms of where their valuations are. I mean, extremely comfortable in terms of where their valuations are. But with all the uncertainty around, I'm not too sure that will be the best part of the marketplace to be in.
All right, that's some expert opinion coming in on IT space. Take a short break then. More news and updates on the other side. Welcome back. Let's go across to the latest update on Iran-US nuclear talks. The second round of talks between Iran and the United States concluded in Geneva. The negotiations held at Oman's embassy in the Swiss city were mediated by Omani foreign minister, who said that the talks ended with good progress towards identifying common goals and relevant technical issues. He added that much work is yet to be done and the parties left with clear next steps before the next meeting. US Vice President J.D. Vance also commented on the talks, saying that in some ways the United States diplomatic talks with Iran went well as both parties agreed to meet afterwards. Listen in.
I think the president has a lot of options. We do have a very powerful military. The president's shown a willingness to use it. He also has a remarkable diplomatic team. He's shown a willingness to use that, too. And so what the president has been very clear with the Iranians, and actually I just talked to Steve Witkoff and Jared Kushner this morning about some of their negotiations, is the United States has certain red lines. Our primary interest here is we don't want Iran to get a nuclear weapon. We don't want nuclear proliferation.
Okay, with that, we'll slip into a break. But before we do that, here's a quick sneak peek into the stocks that we will address on your stocks today. Do not forget to catch fundamental and technical experts give their views on these stocks at 2 p.m. today, only on CNBC TV 18. Welcome back. You're still tuned into Business Lunch. India is set to sign an MOU with the United Nations World Food Programme on Wednesday to supply 1 lakh tons of rice for humanitarian operations. Earlier, UN's resident coordinator in India, Stephen Prisner, told CNBC TV 18 that the United Nations looks at India as a strong partner with over 20 events scheduled in the next few days. Listen into what he had to say.
India can lead the South, but also the world in terms of actual solutions that can make impact for people's lives. We are already having a very, very large collaboration in issues such as environmental protection, climate change, disaster risk reduction, nutrition and food security, in economic development, social protection, in health, in decent work. So we have a very robust memorandum, a very robust framework document together with the government of India.
In fact, we also spoke to the Food Secretary on India's sugar production metrics. Listen in.
Sugar, we were expecting actually 343 lakh tons of sugar production this year, but the numbers are going down and we are now estimating about 330 lakh tons of production of sugar. But even that number is very, very comfortable because our consumption in the country is roughly about 285, 90 lakh tons of sugar. We still have surplus. We allowed about 20 lakh tons of sugar we were allowed for exports, but because of some issues with export parity, the exports have not happened to the extent that we thought. The brokens which are in the surplus now, which the entire operation generating, rather than now transporting them to my godowns, storing them over there for maybe a year or two, I'm able to dispose them quickly, and I'm tying up now with the Ministry of Petroleum and the oil marketing companies that this broken rice which we'll be generating can be used for the production of ethanol.
Okay, with that, let's move on. A minor controversy has broken out at the AI Summit. The government has asked Galgotia's university to vacate their pavilion after it was found that a robot they claimed was built at the university's Center of Excellence was actually a Chinese import from Unitary Robotics being sold under the name Geo2. The imported robot dog was being exhibited at the event by the institution as Orion. The faculty member who made the comments, however, maintains her statement was misinterpreted. Okay, all right. With that, we'll take a leave on this edition of Business Lunch. Mid-Cap Radar comes up next.